Welcome to the Radio Revenue Podcast. A warm welcome to you, our dedicated learner. Today we're embarking on a really deep dive into Darden Restaurants Inc. You definitely know their brands, Olive Garden, Longhorn Steakhouse, but there's this fascinating, pretty complex business engine, powering all these dining experiences across North America. We've gone through their latest financial reports, their strategic documents, operational insights as well. Our mission today is to sort of cut through the corporate speak and really extract the essential knowledge. We're focusing on their key growth drivers, the strategic decisions that make them a leader, and the significant challenges they skillfully navigate.
Yeah, and what's truly fascinating here, I think, is that we're getting a direct look into the sophisticated inner workings of a company managing thousands, literally thousands of locations. Understanding their methodical approach offers really invaluable insights, not just into the, hyper-competitive restaurant industry, but into large-scale business operations generally, human capital management, and robust risk mitigation strategies. It's about dissecting what truly makes a titan like Darden tick, and maybe what lessons it holds for any large enterprise.
Okay, let's unpack Darden's immense footprint then. As of May 25, 2025, they owned and operated an astonishing, 2,159 restaurants across the U.S. and Canada.
Wow, that's huge.
That's a truly sprawling empire. And we're talking about household names like Olive Garden, Longhorn Steakhouse, sure, but also Cheddar's Scratch Kitchen, Yard House, Ruth's Chris Steakhouse.
Some high-end ones in there, too.
Definitely. The Capitol Grill, Seasons 52, Eddie V's Prime Seafood, Bahama Breeze, and the Capitol Burger. Plus, on top of that, they extend their reach through 154 restaurants run by independent third parties. It just underscores their vast market penetration.
And if we connect this to the bigger picture, Darden has very strategically positioned itself as a dominant leader in what's actually a highly fragmented full-service restaurant segment. Their success isn't just about having, a lot of brands.
Yeah.
It's about leveraging their collective experience across these brands in areas like operational excellence, sharp brand management, a sophisticated supply chain, and advanced IT. This integrated capability, it allows them to achieve efficiencies and consistency that are frankly incredibly difficult for smaller competitors to replicate. That gives them a distinct competitive edge in, scaling quality.
Okay, here's where it gets really interesting, I think, in terms of their strategic maneuvers lately. Darden made a pretty significant play on October 11, 2024. They acquired 100% of Chewy's Holdings, Inc.
Ah, yes, the Chewy deal.
Right, an all-cash transaction valued at $649.1 million. That immediately added 103 Chewy restaurants to their, already impressive portfolio. This isn't just about getting bigger. It feels like strategic expansion.
Absolutely. And this acquisition, it was financed by issuing $750 million in senior notes, specifically $400 million at 4.350% due 2027, and $350 million at 4.550% due 2029.
Okay, those are specific numbers.
They are, but the takeaway here, I think, is Darden's ability to secure significant, well-structured financing at pretty favorable terms. That reflects strong investor confidence in their long-term stability and, growth prospects. The clear strategic intent was definitely to drive sales and unit growth, but critically also to generate supply chain and support cost synergies.
Synergies meaning efficiencies, cost savings.
Exactly. It means they weren't just buying restaurants, they were buying an opportunity to integrate Chewy's into their massive existing infrastructure, leveraging Darden's huge buying power and operational expertise to reduce costs across the board for that new brand.
But it's not just about adding new brands, is it?
No, it's not.
Because Darden also announced in their June 2025 earnings call that they're exploring strategic alternatives for the Bahama Breeze brand. That includes, 28 company-owned and 1 franchise location? This could mean selling it off or even converting some locations to other Darden brands. So what does this signal about their broader portfolio strategy?
Well, it really highlights Darden's sophisticated and, I'd say, active portfolio management. They're not simply accumulating brands.
Right.
They're constantly optimizing their entire lineup. By exploring divestiture or conversion for Bahama Breeze, they're assessing which brands fit best with their long-term vision, how to maximize value from every single asset, and ensuring that all units contribute effectively to the larger enterprise. It demonstrates a dynamic rather than static approach to maintaining brand relevance and profitability in a market that's, constantly evolving. It's about strategic alignment, making sure every piece fits the puzzle perfectly.
Okay, let's talk numbers then, because that's often where the clearest picture emerges of a company's health, right?
Absolutely. The bottom line.
For fiscal year 2025, which ended May 25, 2025, Darden reported total sales increased by 6.0%. That brought them to an impressive $12.0 billion, up from $11.39 billion the previous year. That kind of revenue growth is a pretty strong indicator.
It is, and this growth was primarily driven by two key factors. First, a blended same-restaurant sales increase of 2.0%.
Which is good organic growth.
Exactly. That speaks to their ability to attract more customers or get existing ones to spend more. And second, the substantial addition of those 103 Chewy's restaurants, plus another 25 net new restaurants across their other brands. It's also notable that net earnings from continuing operations increased by 2.0% to $1.05 billion. Now, while earnings growth lagged sales growth a bit, it still indicates pretty healthy profitability, especially given the challenging economic climate we've seen.
And diving deeper into their operational costs, it reveals some, well, compelling efficiency gains in places. Food and beverage costs actually decreased as a percentage of sales.
Interesting.
Yeah, which is a positive sign for their margins. They said this was largely due to smart pricing leverage and strategic cost savings, meaning they're, adept at managing their supply chain and purchasing. Similarly, labor costs also saw a decrease as a percentage of sales. They benefited from increased sales volume that leverage in productivity improvements, even with broader wage inflation happening.
Okay, but not all costs moved in their favor, right?
No, that's true. Restaurant expenses and marketing expenses actually increased as a percentage of sales.
Why was that?
Well, partly attributable to general inflationary pressure, sure, but also the integration of the Chewy acquisition, which obviously introduced a new cost structure, and increased marketing efforts, which are pretty necessary to stay competitive in such a crowded market.
Makes sense. And you also mentioned impairments.
Yes. It's also important to note that impairments and disposal of assets increased. Primarily, they said, due to the strategic decision to close 22 underperforming restaurant locations during the fourth quarter of fiscal 2025.
Right. Which brings up that important question. How does a company of this sheer scale systematically decide which restaurants to close and, well, why?
Yeah, it sounds like they have a very systematic process for that. Darden regularly reviews restaurant performance. And if a location consistently falls below their, minimum standards, they initiate a thorough analysis. This involves really dissecting the causes of underperformance. Is it changing demographics in the trade area? Escalating lease costs? Specific site concerns? If operational or marketing plans fail to bring that location back to acceptable profitability, only then do they evaluate it for relocation, closure, or even conversion to one of their other, maybe more suitable brands.
Yeah.
It doesn't sound like a hasty decision. It's more of a calculated move to optimize the overall portfolio.
That makes sense. And running thousands of restaurants successfully is, it's a monumental task. Darden's operational approach clearly places a strong emphasis on high-quality restaurant management. They achieve this through incredibly detailed operations manuals and structured training programs for their managers, often lasting, get this, 8 to 12 weeks. That's extensive.
Wow, yeah.
What's more, they deploy specialized training teams specifically for new restaurant openings. That ensures a consistent brand experience and operational standard right from day one, which is just critical for customer loyalty.
And what's truly fascinating here, I think, is their integrated approach to human capital. They call it their people strategy.
Right.
It focuses on 4 core imperatives: hire, train, reward, and retain. For instance, get this, in fiscal 2025, their hourly team members earned an average of $24 per hour.
$24, that's significant.
Very significant, especially compared to their company-wide minimum hourly wage policy of $12. They also subsidized a remarkable 75 to 81% of medical premiums for team members, depending on the plan chosen. This level of investment in compensation and benefits feels like a very strategic choice, not just, a nice thing to do.
Absolutely. And this investment, it goes beyond just wages and benefits, too. They offer programs like the Next Course Scholarship, awarding $3,000 scholarships to children of team members. That shows a commitment to their employees' families.
That's great.
They also have a fast fluency program, providing free English language learning for team members. These programs, they enhance employee well-being and loyalty. And critically, their consolidated turnover rate for hourly team members in fiscal 2025 was 67%. Now, that might sound high to some, but they are reported as one of the lowest in the restaurant industry.
Which is huge in hospitality.
Exactly.
Yeah.
For a service business, lower turnover translates directly into significant cost savings, less recruitment, less training, and crucially, eventually, it leads to more experienced staff, which directly enhances the customer experience. You feel that difference.
Yeah, you do. And this robust investment in human capital is complemented by an equally rigorous quality assurance system.
Mm.
Their total quality department, that's what they call it, is responsible for ensuring safe, high-quality food and clean environments across all locations.
That sounds like a big job.
Huge.
Yeah.
They achieve this through stringent supplier evaluations, independent third-party inspections, and adherence to HACCP food safety programs.
HAC.
Hazard analysis and critical control points. It's a systematic, preventive approach to food safety. This department actively monitors over 1,400 suppliers for more than 30 countries.
Wow, 1,400 suppliers in 30 countries.
Yeah, it's a massive, complex undertaking that ensures consistent product availability and quality at competitive prices. That's foundational to their brand reputation, really.
And Darden isn't just about dining, right? They also place a significant emphasis on ESG matters, environmental, social, and governance. They formally outlined their food principles back in 2016, committing to sustainable sourcing, nutritional transparency, rigorous food safety protocols, and humane animal welfare practices. To guide these efforts, they've even established an animal welfare council comprising academics and thought leaders. That underscores a proactive and thoughtful approach to these broader societal concerns.
Yeah, and their community involvement seems really substantial, extending beyond just their direct operations. In fiscal 2025, the Darden Restaurants Foundation awarded approximately $4.0 million in grants to various national and local nonprofits. This includes a notable $2.0 million grant specifically to Feeding America for refrigerated box trucks. That brings their total contribution to the Feeding America network to $20.3 million since 2010.
That's a truly significant impact on addressing food insecurity across the nation. Very commendable.
Yeah.
And we can't forget the Darden Harvest program either. That began way back in 2003.
Right, the food donation program.
Exactly. This impactful initiative collects surplus, wholesome food from their restaurants daily and donates it to local nonprofit feeding partners. In fiscal 2025 alone, they contributed about 6 million pounds of food.
6 million pounds.
Which is equivalent to about 5 million meals. This not only provides essential sustenance to communities, but also significantly reduces food waste. They also actively support the National Restaurant Association, educational foundations, ProStart, and Restaurant Ready programs vital for training the next generation of talent for the culinary and hospitality industries. It shows a long-term commitment to the whole sector.
Okay, but of course, every successful company, no matter how large, faces significant challenges. Darden is certainly no exception. Their reports highlight several key risk factors they're constantly navigating. One major concern is definitely inflation and those pervasive cost pressures across commodities, labor, healthcare, utilities. They explicitly noted experiencing higher than normal inflationary conditions in fiscal 2025.
Yeah, and this raises that important question about their ongoing ability to adapt, doesn't it? Adapting to rising food and labor costs. They highlight the intensely competitive labor market and those increasing minimum wage rates across various states and localities. If they can't effectively offset these pressures with, say, strategic pricing adjustments or further productivity improvements.
Right, the math doesn't work.
Exactly. It directly impacts their profitability. It's a continuous balancing act for an employer of their scale, requiring sophisticated forecasting and real operational agility.
And they also face risks from just broader economic and business factors, shifts in consumer spending patterns during downturns, unemployment rates, fluctuating energy prices, even global conflicts or severe weather events can drastically impact customer traffic. Then there's the ever-present threat of health and safety concerns, particularly food-related pandemics or outbreaks. Those can severely reduce customer confidence and traffic almost overnight.
And what's particularly crucial, I think, in today's digital landscape is their reliance on information technology and cybersecurity.
Oh, absolutely.
Darden uses IT extensively for, well, virtually every aspect of their business, in e-commerce, marketing, their complex supply chain management, the point-of-sale systems in thousands of restaurants. Any significant failure, interruption, or security breach could severely compromise operations, damage guest relations, or lead to substantial data loss and, significant compliance costs.
So how do they mitigate that?
Well, they mention ongoing strategic investments, regular third-party audits against the rigorous NIST framework,
Good as deeping.
the National Institute of Standards and Technology's cybersecurity framework, very respected, and also comprehensive employee training. It shows they really understand the criticality of proactive defense in that area.
Okay. And lastly, the intense competition. That remains a constant headwind in the full-service dining sector. It's not just from other large chains, but also from independent operators and increasingly from supermarkets offering those convenient meals and even third-party delivery aggregators that fundamentally change how people access prepared food. And of course, the accelerated impact of social media, where negative or even just inaccurate information can spread instantly and really damage their carefully cultivated brand reputation, regardless of whether it's true or not.
That's a tough one to manage. But despite all these risks, Darden does maintain a robust financial position. Their principal source of liquidity is consistently strong cash flow from operating activities, and they strategically deploy that cash to fund essential capital expenditures for new and existing restaurants, pay consistent dividends to shareholders, and repurchase shares of their common stock. It signals a balanced commitment to both sustained growth and direct shareholder returns.
Yeah, and they actively target an investment-grade bond rating, which they successfully hold from all three major agencies, Moody's, Standard & Poor's, and Fitch. That's a good sign of stability. As of May 25, 2025, they also had access to a substantial $1.25 billion revolving credit agreement with no outstanding balances. That reflects a very healthy liquidity position, providing significant flexibility for future investments, strategic acquisitions, or just navigating unforeseen economic challenges without undue strain.
And for shareholders, as you mentioned, Darden has that proven history of paying consistent cash dividends, which underscores their financial reliability. And notably, on June 18th, 2025, their board of directors authorized a new share repurchase program, allowing them to repurchase up to $1 billion of outstanding common stock. That's a clear signal of management's confidence in the company's ongoing financial health and a direct mechanism for returning value to investors.
Okay, finally, let's just briefly explore how Darden maintains integrity internally, particularly concerning financial markets. They enforce a highly detailed insider trading policy statement.
Important stuff.
Very. It applies to every officer, employee, and board member. And this policy strictly prohibits trading in company securities while in possession of what they define as material non-public information.
And that definition of material information is key. Their policy defines it very broadly to include, well, virtually any undisclosed information that could reasonably affect the price of their securities.
Like what specifically?
Things like quarterly earnings before they're announced, internal financial projections, significant acquisitions or dispositions like Chewy's or Bahama Breeze's, changes in debt ratings, or even a material cybersecurity breach. It also clearly stipulates that information is only considered public after it has been broadly disclosed to the investing public, and enough time has passed for that public to absorb it, typically 2 full business days after an official announcement. That level of detail is critical to prevent even unintentional breaches.
And they implement truly strict rules to uphold this policy. Absolutely no short sales of company stock, for example. No holding company securities in margin accounts, which could potentially force a sale at an inopportune time.
Right. And for specific designated insiders, there are rigid blackout periods. These start 3 weeks before the end of each fiscal quarter and conclude 2 full business days after earnings are officially released. Furthermore, certain sensitive transactions require explicit preclearance with the General Counsel, adding another vital layer of control and oversight. It sounds pretty comprehensive.
It really does. And if we connect this back to the bigger picture, these stringent policies are absolutely crucial for maintaining investor confidence, protecting the company's reputation for ethical conduct, and ensuring fair and transparent practices in the financial markets. It demonstrates a deep commitment to accountability and integrity at the highest levels of the organization, which ultimately builds trust with all stakeholders, investors, employees, customers.
Well, that was a truly comprehensive deep dive into Darden Restaurants Inc. We navigated their extensive brand portfolio, dissected those shrewd strategic maneuvers like the Chewy's acquisition and the Bahama Breeze reevaluation,
and examined their impressive financial performance. We then explore the detailed operational excellence and human capital strategies that really power their massive success, from those long training programs to comprehensive employee benefits. We also uncover the critical risks they meticulously manage, everything from inflation and economic shifts to cybersecurity threats, and observed how their robust governance and commitment to environmental, social, and governance initiatives shape their corporate identity. It's abundantly clear that running a large, successful restaurant conglomerate involves far, far more than just serving great food. It's really a masterclass in complex, integrated business management.
It really is. And this exploration, I think, raises an important question for you, the listener, to consider. How does Darden's meticulous planning and execution across so many diverse areas, from their integrated supply chain automation to their significant investment in employee welfare and their robust cybersecurity defenses, how does this offer a blueprint for success and resilience that other large organizations, maybe even outside the restaurant industry, could learn from? Reflect on what specific aspects of their multifaceted approach resonate most with your own understanding of what drives sustainable business success in today's dynamic global economy. It's definitely food for thought.
It was Revenue Radio Podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.